Hello Mountaineers, Jordan from Mountway Finance here. I'm getting back down to basics. We're talking about some fundamental topics here. Today we're going to get into offset and redraw. This follows on from a video down here, I think, which kind of explained the basics of like interest charging on debt. So watch that if you want to get that kind of foundation. Let's jump into offset and redraw. And where we left it last time was the concept that if you have a debt, we're going to talk that debt here, it normally would pay off if you meet the minimum payments in a profile that looks a bit like that. And that is time in years, down the bottom there. And that's meeting the minimum payment. It doesn't come off in a straight line because of the fact that you're meeting a fixed repayment every month. And initially, the portion of interest in that fixed repayment is very, very large. So what do you do about it? Pay more often, pay fortnightly, pay weekly, pay daily. And we get to this kind of idea where, well, since interest is being charged daily, then anything we can do to bring the balance of that loan down more often by as much as possible will save you the most amount of interest in your home loan. And so what does that look like? It looks like using these features called offset and redraw. This is where you throw your money, your savings, anything surplus that you're not spending, and any windfalls that you have onto the loan, and you keep it there. And you keep it there until you need it, or you just keep it there full stop. And what that might look like is if that is your standard profile of debt and you come into the loan and you have some savings, you can instantly bring your debt level down to here. And then, you can, if you were to continue to repay, you would literally just do that, right? So you've gained a couple of years here in the repayment of your loan, and you've also saved a bunch of interest in doing so. Now, let's look at something perhaps more realistic. You come in here, it might jitter around a bit, and then you get your annual bonus and you drop that into the loan. It might jitter around a bit, maybe you work on savings, so you're paying ahead of the loan, get another bonus, get it down here. Maybe you sell some shares. And the idea is you dump this stuff onto the loan. And even at this point, if you lost all kind of like, discipline and just went back to paying the standard repayment, you would be down here. And the work that was required to take those years off the loan was done here and here and here, and also in these areas. That's money coming into the loan as often as possible, as much as possible, sitting on that loan, each and every daily balance being reduced by as much as you possibly can. And how do you do that in a flexible way so that you don't kind of like put this money in and then never see it again, or it technically is yours still because it's wrapped up into the value of the house, but how do you achieve this? Well, you use offset and you use redraw. So when you get your loan, you will see two accounts. Well, generally, you will see one account. The first account is your debt account. That is the account that says you owe this much money to the bank, and you'll generally see it in negative. When you log into internet banking, you'll see something that says negative 500,000. That's basically an account where you owe money. If you pay money in advance of the minimum directly into that account, you open up capacity for redraw. So you'll see this might say limit, and then you might say available. And let's say you've put $50,000 onto that loan. If you've got $50,000 available because you've put it into the loan directly, you do technically have the ability to pull it out. Not technically, actually. The minimum repayment says you're up around the $500,000 level. You've still got that limit to use. So this available is able to be redrawn. That's redraw. Money you've paid directly onto the loan that you can take back. Whilst it's sitting on that loan, the effective balance for interest calculation is 450. It's basically the sum of those two numbers. Okay, so you're paying interest on 450,000 whilst your $50,000 is sitting there. If you're thinking about, well, what do I do with money? Where's the best returns? And this is a 5.5% debt, which means it's costing you 5.5%. That money there is earning you 5.5%. Interest saved is interest earned, right? So if you were to compare that to, let's say, a term deposit at this point in time, I'd say you get 3.5% to 4%, right? It would beat that. It would beat the term deposit. If you were looking at shares, you might get 8 to 10%, and that's a mixed return, like it's not just yield, it's also capital growth. But it would probably beat this, but then you have to think about the risk associated with shares, things like timing, investment strategy. This is generally the best cash strategy you can undertake. Cash is simple, cash is easy. Here's a few things. Generally very, very safe. It's available at call, and the returns don't fluctuate generally. If that's what you're saving, that's what you're always earning. So it's not the strongest category of investment, but it's a pretty good category of investment, and it especially does beat term deposits or high interest savings accounts in general. Right, so it's a great place to park your money, especially if you're not interested in putting it into shares and managed funds and other things like that. Right, so that's what Redraw does. Literally, it takes your money, it puts it into the loan, and it saves you interest while it's sitting there. That's what Redraw does. Let's talk about offset. Right, so you have your loan, and you've got $50,000, and you can put it into this thing called an offset account, and it sits here as a totally separate account. There's your 50,000. You see one account with a negative balance of 500,000. Limit. Available nothing, because there's nothing sitting in offset. But then this account has a balance of 50,000. What offset does is allows you to conduct or hold that money in a totally separate account, linking the two so that they act like redraw. So therefore, you're paying interest on the net balance here. $500,000 minus the $50,000, you're paying interest on $450. Okay, so it's very basically similar to redraw. Why would you use one or the other? Well, offset generally has a lot of functionality as far as transacting. Very flexible. You know, you can cut checks. You know, not that anyone does it anymore, but you can also do all the online banking stuff. You can do BPay. You can have a credit card attached to it. You know, all those kind of features come with offset. Not so much redraw. In addition, there is the ability to set up multiple offsets with many banks. It's quite common nowadays, and that means you can have. I need to draw this a little bit better. You can have an account there. Let's say that's got 50. You can have another account there with $10,000. Let's say that's your holiday fund. You can have another account here for $5,000. Let's say that's your fire extinguisher fund. And all of these balances add up to become a total offset balance. So here we would have 65,000, and that would net off your loan. 435,000 is what you pay interest on. Now this is really useful. Yeah, this is probably the key reason people take out offset, because then they can organise their money. Some of their stuff like Barefoot Investor, I think are great principles, and being able to organise your money in this way means that you can have your loan as well as the structure that kind of like theory brings. So you don't lose that. A lot of self-employed people also like to have an offset account, which is business related, to hold their BAS before it needs to be paid, for example. It's a great way to save interest. Talk to your accountant about that though, because there are some tax rules you've got to navigate. Rightio, that is offset account. That's how it saves you interest. That's how it works and why it's similar to redraw. And that's one of the basic things you can do to reduce the interest cost of your mortgage. Righto guys, that's all we have time for today. If you found this useful, please like, share, comment, whatever it is you do, that would be perfect. Thank you. Catch you next time.